Hey everybody, hope you're doing well. Today we're going to cover our weekly predictions for the QQQ ETF for the week of January 11th. For brevity's sakes, we're just going to call them the Qs. If you didn't know or you're new to this video, every week we cover the companies that participate in the Qs, where we're expected them to go, what we think is going to happen with the Qs. Are they going to go up or are they going to go down? And really, if you don't know, the Qs is really a reflection of the Nasdaq-100 or all of the major high-tech companies. This is Prep to Grow's opinion, so take it as such. It's not meant as we're giving a financial direction of where to go with the Qs, but it is our opinion and our recommendations about where it's going to go. If you like this content, please like and subscribe. So let's just jump into it for what's going to happen this week. So we continue to say it's going to be flat to bull. This week it is actually pretty good. It's gone up, 2-3 percentage points, and so that was great. So it hit the bull. We do have some caution, and we'll talk about that in a second. So the reasoning this week, Q4, just like last week, the growth for Q4 has been phenomenal. There's an enormous high volume of calls and recommendations in general. There's limited earnings announcement this week. So for us option traders, it's still a little boring, just like last week, but next week it's going to start off big with a couple of quarterly announcements. And we'll cover those in a sec. Some caution that we're seeing, FANG Plus is slowing down, and the analysts are slowing their expectations down as well. It is Q1, and so while it may seem like norm, but it is, their expectations in the slowdown is more than it was in Q1 of 2020. So it is raising some concerns, and that's why it's in red. The next is unemployment rates continues to climb. Are we going to go into a double dip recession? Who knows? Our data doesn't show that for sure at this point, but we do see some slowdown. So we'll keep it monitoring, keep on updating as part of our weekly videos. So again, flat to bull. Flat to bull essentially means, 1 to 3% growth this week. With earnings announcements, I think we continue to see the growth. So let's jump into companies that are going to announce. They're not announcing next week, but the week after that. So we're going to cover 2 this week and 2 next week. There's about 4 or 5 that are announcing, and we'll cover them. So we'll cover the big ones. So Netflix. So Netflix makes up 1.85% of the total Q's holding. They tend to be a general mover in the market. So if they're going up or down, it may reflect a broader implications to the whole streaming paid content service. I do like Netflix quite a bit. It's from my hometown of Los Gatos, California. So great company, been very good for the city there. We've been tracking them since 2017. What we show here is just what their year growth has looked like since they are announcing their Q4 or their fiscal year 2020. So we're going to cover just a little bit about that. So we expect there's going to be slow growth, as you can tell by the curve chart on the growth, as well as where the earnings, well, at least the analysts are rating them, they've docked them down quite considerably. So our growth decline premeditated the changes by the analysts, and so they got a little bit slow on the slowdown, but they've caught up to that. For quarter over quarter, they've almost had 5% stock growth, which is very low for that period of time. Volume has decreased quite a bit. Stock, again, 5%. Analysts have actually raised their targets on them, which is surprising. Prep to Grow's accuracy for Netflix is about 92%. But let's take a look at Netflix and where we think their price targets are going to be. So if we jump into Prep to Grow's Grow application, which is our AI, big data, recommendation and screener platform. If we just search for Netflix, it'll come up. So what we're showing is just some recommendations that were in the last 7 days. All of them have sold. We recommended puts consistently for the last several days. And again, all of them had hit their targets. Let's go into this one, which is a March 19th. Just note that when we do sell one as a recommendation, we do stop tracking it. So it's just kind of stored in moratorium just so people and our subscribers could see where it was and maybe do some back testing on their own strategies. So we predicted a 503 stock price back on January 4th, which seems like a big drop because at the time it was about 540 or 550, but it did drop. It's dropped all the way down to 511 is where it currently stands. And so as we see them going into earnings announcements, we don't really see any adjustments to our predicted stock price. It dropped dramatically prior to it. So analysts and investors may be seeing the same things we are, but certainly 503 is what our predicted stock price is for Netflix. We don't think it's going to move much. And the data is showing that Netflix is struggling, unfortunately. So let's cover the next one that's announcing. So Intel. Intel's struggled. I'm very fond of Intel. Intel was my first job in college, so liked them quite a bit, being a Bay Area boy, born and raised. Seeing it flat growth and struggle certainly doesn't give me happy thoughts, but that's where they're at. Analysts have knocked them down. The volume has increased, not as dramatic as Netflix, but certainly gone down, and their stock prices has decreased. We have a 94% accuracy in predicting a combination of the calls inputs for them, so we're very accurate. I think out of 285 recommendations we made for them this year, we're 266 accurate. So very accurate with Intel, and we've been tracking them since 2012. So that long history makes us better at predicting their company performance, which then impacts their stock price movement. So you can see here, they got a hit. This came out, we were ahead of it as usual. It came out that they were struggling a couple months after that, and they've started to try to rebound up and get to growth. So they're certainly growing again, but there's really nothing monumental that's going to drive them to continue growth. So they got to make an acquisition or do something like that. These signals that we're seeing here in terms of growth are internal driven. They may make an acquisition, but these kind of signals means that they're really ramping up internally rather than doing something major externally. Usually you see this go down, our growth cycles go down as they make room for a major acquisition. So they're not going to make a major acquisition, at least what we see. They may make some minor ones, but a lot of this is internally driven growth. So let's take a look at Intel as well around a price prediction. So again, going back to grow, just type in Intel. We'll pick a one with a little bit higher volume to open interest. So again, all these sold as well. So we reckon this on January 4th. We predicted stock price of 50. When it closed or sold off is at 51.52, so it jumped up quite a bit. This sold on the 7th. Again, our predicted stock price for Intel is $50.82. For calls, we're 95%, almost 96% accurate. For puts, we're about 94%. So those combination gets us to about 94 or whatever the prediction was. But our stock price predicted for Intel is at 50.82. They're currently at 51.63, so not a lot of movement that we are currently projecting over the next 2 weeks. We do monitor their performance and make new stock price predictions every day. So check back next week when you do the Qs, and you can see if it's moved. So that's Intel. Again, like Intel quite a bit. We've been tracking for a very long time, very accurate in their predictions with Intel. But we see that they're at the price they need to be at based upon their internal movements and growths. Next week earnings, just cover the three that we didn't touch on. Texas Instruments, CSX, which is a railroad company, Intuitive Surgical. Texas Instruments is probably the most boring company in high tech. They bought a company I used to work at, National Semiconductor, but again, the most boring company in high tech. CSX is a railroad company. Intuitive Surgical is probably the more exciting of the three. And next week, we'll probably cover CSX and Intuitive and give updates on Intel and Netflix. Again, there are no earnings announcements next week. And for option traders, it's going to be a bit boring. So let's jump into the meat of why we're predicting one way or the other. So as you can see, going into Q1, the analysts have started to readjust their forecasts. they're downgrading FANG and they're upgrading all the non-FANGs. So for those that aren't really familiar with the holdings of the Qs, 15 companies, or what we call the FANG Plus, make up 65% of their total holdings. So it's very important to track them separate. Because if those 85 companies move, it's not going to do a lot to the QQQs. But if any one of those 15 move, it'll have a big impact. So that's why I track them separately. So with the downgrades or the readjustments going to Q1 from the analysts, is that sign of weakness or just normal? If we're showing the full year here, so last year at this time, earnings per share were 2.73, and their revenue forecast was at 20 billion versus 12 billion. So again, they're projecting FANGs to struggle. We haven't really seen that in our data as aggressively down as this, but we do see it trending down in their growth, not as hyper growth as they had in Q4. Oh, excuse me. So if we go into quarterly price predicted growth, we do see it declining. Universally, we see it less in Qs, but more in FANGs, and that's why there's a more dramatic impact. But we do see an adjustment. Certainly, when we flagged the adjustment, we flagged it twice. End of November, where we thought there's going to be a 5% pullback in December, but now we're seeing it definitely more prominent coming into the end of the year and beginning of the year. So that's why we have a lot of caution for this week's predicted option volume. I mean, this graph reflects for itself. If you look over to the last day, a couple of days in January, or first couple of days of January, off the chart volume, a lot of calls, which is good. Getting to the bear versus bull, we see that there's an uptick in call predictions for the FANGs, which is great. If we look at the non-FANGs, it's pretty stable as where it's been through for the last couple of weeks. So this is why we're predicting more bull versus bear this week. 30-day predicted stock price. We see some drop in predicted price for the non-FANGs, but should not have an overall impact on the Qs. We do see more stable around our predictions for the FANG Plus. It's 381 last week. It's 373 this week. So really kind of more stable. 388. Excuse me. It was 373 last week. It's 378 this week. So it's gone up a bit, but we see FANGs really rocking Q4. Again, maybe a pullback or start of a pullback in Q1. So we'll have to see what happens. And we'll keep everybody updated as part of this video. A little bit longer this week, but more details around some of the announcements and changes that could be reflecting in the key markets or the Nasdaq-100. I appreciate your time. If anybody has any questions, feel free to reach out to Prep to Grow. If not, happy trading, and we'll talk to you next week. Bye-bye.